Petco IPO analysis. This is the WOOF stock analysis. WOOF is the ticker symbol for Petco. An awesome ticker symbol, by the way. This is StockerFinance. I am your host, David Shore. Make sure to follow me on Twitter, twitter.com/StockerFinance. If you'd like to support the show, patreon.com/StockerFinance. I do take a fair bit of research and time to create these episodes. We're going to be mainly using the Form S-1 registration statement, which is filed with the Securities and Exchange Commission, the SEC. It was filed on December 3rd, 2020. If we move on here, I do want to talk about something interesting with Petco first before we dive into some of the numbers, the balance sheets, consolidated income statements, etc. Because Petco's gone public 2 times in the past and really had interesting outcomes both times. So Petco's operating profit nearly doubled in the first 9 months of the fiscal year, crucial for a company owned by private equity firms and saddled with $3.3 billion in debt. Now, to get to the main point here, sorry, I'm just kind of reading this paragraph. CVC and the CPPIB acquired Petco for $4.6 billion from fellow private equity firms TPG and Leonard Green in 2016, 10 years after they took Petco private. They said Petco could be valued at $6 billion when it returns to the stock market recently, where it will list under the ticker WOOF on the NASDAQ. So that is some good news that they acquired it for $4.6 billion, and now they're saying it's going to be worth $6 billion. That's kind of interesting. It says show that they have some growth during these, 4 years, during that time period, nearly 5 years now. Now, one of its main competitors that we really need to point out here about Petco is Chewy Inc., ticker symbol on the New York Stock Exchange, CHWY, currently trading at $99.31 a share. It's up 6% today, and over the past year, had a phenomenal year, just like many tech companies, up 247.6%. The 52-week high of over $100 a share at $101.04 with a market cap of nearly $41 billion. And the reason I'm bringing this up right now is because Petco is a really large competitor. How's a retail giant? We've seen many retail giants. Sears, Macy's is struggling. JCPenney obviously was a kind of a disaster. We saw Toys R Us go out of business, etc. So we've seen a lot of retail get shut down by their online competitors. So is Petco facing this challenge? It isn't IPOing because it's facing a desperate situation where it needs to raise funds in order to boost its online presence to compete with Chewy? Or what is the real situation and why is it going public? And I really want to talk about Chewy and Petco and how perhaps in the future we might see a buyout or a merger between the two. Maybe Chewy will buy Petco, who knows? But I think that could be a really interesting business decision that I'll touch on at the end of this video. Now, first off, let's talk about the pet industry, specifically the pet care industry, which Petco really focuses on. Now, if you look at the CAGR here from 2008 to 2019 to 2020 to 2024, we see about 5% increase to 7% from 2020 to 2024 estimates. And if we look at the total, it's worth $97 billion in 2020. If you break it down to category, you can see that veterinarian care is $27 billion, consumables $39 billion, supplies $20 billion, services $8 billion, companion animals about $2 billion. And veterinarian care is really interesting because Petco has recently gotten into that segment and really been boosting its veterinarian centers. I think that's a very good idea for Petco, especially since currently people are adopting animals like crazy, especially support animals, dogs, cats, maybe you get a fish or something. But the reason I'm saying that is because during these lockdowns, people are depressed, people are sad, they need a fun little fuzzy furry animal to cheer them up every day. I know I sure could use my dog all the time. That sounded kind of weird, but I know I could, I need to pet my dog every day. She's so fluffy and makes me feel happy every day. And without her, my life would definitely be slightly worse. So I think people are buying animals like crazy right now. And because of that, veterinarian care is going to be needed in the future, and Petco is taking advantage of that. On top of that, we're seeing increased demand for supplies and consumables. So Petco is in a decent position here. Now, out of all the retail stores, Petco has actually performed quite well during this entire economic and cultural and just insane shift and situation that we're experiencing with the pandemic and as a result of it. And we're going to see a lot of ripples from that even after, a vaccine is distributed, etc. Now, if we look at some recent financial performances here, they increased, just as a quick overview, I want to say, they increased net sales from $3.29 billion to $3.58 billion, represent a period-over-period growth of 9%. Comparable sales grew 9.6%, increased their operating income from $69.5 million to $127.4 million, representing a period-over-period growth of 83.5%. They decreased their net loss which is attributable to members, from 88.7 million to 20.3 million, representing a period-over-period improvement of 71.1%. And they increased their adjusted EBITDA from 292.6 million to 335.7 million, representing growth of 14.7% over that period. And that's great news that they're growing, they're shrinking their loss, etc. They said they consecutive grew net sales from $2 billion in 2005 in fiscal 2005 to $4.5 billion in fiscal 2016. Not phenomenal growth there, but definitely a steady, consistent growth over that period, which is great to see that they were growing at all from 2005 to 2016. With a lot of companies that are IPOing these days, you expect massive 100% year-over-year growth, but with these big box retail centers, and service centers, you just don't see that kind of insane growth like you do with tech companies. If we move on to quarterly comparable sales growth, there's a really interesting chart here. You can really tell how it's just taken off during the second and third quarter of 2020 as more people want pets, more people are trying to take care of pets because they have more pets, etc. As I was touching on, people are sad, they're locked in their homes, they want a little furry friend that they can play fetch with, that they can, run around the house with and have fun because let's be honest, dogs, cats, and animals, they really cheer us up. Oops, sorry about that. The presentation kind of glitched out there. And if we go ahead and look at the U.S. pet care industry sales in billions, it grew in 2008 from $56 billion all the way up to $126 billion. Products and services both growing together, really maintaining the same sort of ratio and sort of in terms of percentage of the overall industry. So products is about 74 billion, services now $53 billion. Industry growth, it grew 5%. It was growing 7% in 2009. So pretty steady, 5 to 6% growth on average over the years, which is great to see. It really only had a single year, which was in what does that say? 09. That is 2020 actually, where it had 0% growth apparently. And that it says it's a 4% increase in pets, temporary $5 billion decrease in services, which is due to restrictions, people not being able to go out. That makes complete sense there. Now, if we go ahead and look at relative spend by consumer type indexed to single channel customers, we can see that we have over the years here, if you go up to 4 channels, transactions per year, it goes to 23. One thing I really want to go down to the bottom of this page here is look at maximizing how they're trying to grow their business. Here's what this page is on the S1 for. So it's their growth prospects, etc. But they said they want to maximize customer engagement and loyalty with subscription programs. What do you know? Another subscription program. But they want it beyond their repeat delivery program. They want to capitalize on subscription revenue opportunities, and this includes through the recent launches of additional value-add subscription programs, which includes Petco Vital Care memberships, Pupbox, and Petco Insurance. Petco Insurance, it's an annual service that provides affordable full-service health coverage with the added pet product and service prerequisites not offered by traditional insurance company plans. I think that's actually a really interesting business opportunity there. Pupbox, which is a classic, monthly shipment of food and other, items. Petco Vital Care membership, which is an annual fee-based membership program, provides preferred access to their holistic health and wellness offering across products, grooming, and veterinary care. I think the best option what they're probably going to benefit the most from on this is Petco Insurance and maybe the Vital Care membership. I think they're going to have a really tough time with Pupbox, competing with Chewy and all the other subscription boxes out there. Now, they want to expand into health and wellness, which I think is a genius idea, going into veterinary care, so they have rapid expansion into differentiated veterinary services. They want to continue their growth into their core grooming and training businesses as well. They said grooming is a large addressable market in the United States, and it represents approximately $3 billion in 2020, which is actually a huge industry. I did not really realize that grooming was that big of an industry. All right, guys, it is time for the numbers. That's right. Some of my favorite times of looking at these S1 forms, my favorite part of it is diving deep into the numbers. And luckily, Petco provides us with a plethora of information and detailed in their numbers, which is awesome. So we can really dive into it here. So in terms of net sales, they did $4.4 billion in 2019. That's ending February 1st. In 2018, they did $4.3 billion. So slight growth there from 2018 to 2019, but not incredible growth. Cost of sales increased slightly, and that's most likely why. So although they were increasing their net sales, cost of sales grew as well. And we saw a tiny increase of about $2 million in their gross profit from $1.904 billion to $1.906 billion from 2018 to 2019. If we go over to 39 weeks ended October 31st, 2020, they did $3.5 billion in net sales, and November 2nd, 2019, $3.2 billion. So that's a great increase there as well during that 39 weeks ended period. If we go down and look at net loss, they decreased their net loss from 2018 to 2019 substantially, and also to 39 weeks ended as of October 31st, 2020, from $413 million in 2018 to $103 million in 2019, down to $24 million 39 weeks ended October 31st, 2020. That's great to see. Obviously we want this to be a profitable company, but that is great to see for Petco that they're heading in that direction, even if it's not substantial growth. Now let's look at total assets. And I'm going to have a better chart to show you in a second here. But if we look at total assets, we can tell that they grew their total assets pretty significantly, whereas total debt relatively stayed the same, which is great to see that their equity is increasing over time. Now, on top of that, if we go ahead and look at that, we can see that 2018 they had $600 million, decreased to 561 million. Sorry about that. I totally read that wrong. And that's down to 5 million in October 31st. But the fact that they're decreasing their debt over time and increasing their total assets is great to see. If we go ahead and look at net loss margin as well, decreased to 2.3% net loss margin from 2018 to 2019, down to 0.7% as of 39 weeks ended October 31st, 2020. That's great to see. Adjusted EBITDA saw a slight decrease from 2018 to 2019 as well, as 39 weeks ended October 31st. But once the year ends, we should see that be significantly larger than 2018 and 2019, which is great to see. And the margin also saw a slight decrease, maintaining steady as of 39 weeks ended. Won't be surprised if that increases now that their stores are reopening. People are more comfortable going and purchasing stores, using the veterinarian clinics, etc. If we look at cash and cash equivalents, they have $196 million in cash and cash equivalents. Let's move on here, though. We kind of already looked at this. This is kind of a more consolidated sheet here. They do have goodwill and indefinite lived intangible impairments. If we look at their goodwill here, especially from 2019 all the way, or from 2015 all the way to 2019, although they don't show it all, we can see a slight decrease there, which is fine. If we look at net sales from 2015 all the way to 2019, again, really not insane growth, pretty steady, to be honest, overall. We had slight growth a little bit, from 2015 to 2019, but really not much. And cost of sales also pretty much just stayed the same. So pretty stagnant business here on the net sales side of things. And I really hope that their veterinarian clinics and their investment into that will help boost their margins, number one, since we all know that hospitals and veterinarian clinics charge a lot for pets, which means their margins will be higher for that business, especially for the medicines that they're giving out, etc. We do see total assets increasing pretty substantially, as I stated, from 2015 all the way to 2019 as well, and to 2020 now. If we go ahead and look at total equity, we can see that that increased slightly, kind of all over the place, or decreased slightly. Sorry, I keep messing up my words there. Debt also kind of steady across the board there when you look at the long-term frame of things rather than just over the couple of years. If we go ahead and look at net sales, we kind of already touched on this, so I'm just going to go ahead and skip through this. I think I reposted that twice. Let's go ahead and look at the fiscal year ending 2019 to 2018. If we look at EBITDA as well, from 2018, $15 million, to 2019, $28 million. 39 weeks ended $24 million as of October 31st, 2020. Now let's look at total cash provided. And so if we look at operating activities here, that increased or decreased from $203 million in 2018 to $110 million in 2019. As of 39 weeks ended, October 31st, 2020, $201 million. Now, one thing I want to point out here, because we're really not seeing incredible growth from this company. It's a retail store, so although it may sound not like the most appealing investment or most appealing company to look at, I will say if they can heavily invest into their veterinarian clinics and their higher margin activities within their business to improve their operating activities, to improve their overall bottom line margins, because that's really their problem here, is they're operating in with incredibly tiny margins, selling products within their stores like most grocery stores and retail outlets do. If they can increase those margins with their veterinarian clinics and have a very profitable clinic there and start buying up more local clinics, they can turn into Petco clinics. I know I just said the word clinic a lot. I think they will rapidly increase their bottom line. We'll have the less to worry about as well with competing with the likes of Chewy. So maybe moving away slightly from the retail store side of things and go to clinics and training and grooming, which we already saw, grooming was a $2 billion industry. There's a lot of money to be made in there, and there really isn't one singular veterinarian clinic in the United States. It's usually lots of local ones. So if they can start to buy up local veterinarian clinics, convert them to Petco labeled stores, because of wholesaling medicine, etc., they will be able to have increased margins. I don't know. To me, that would make more sense from a business standpoint. But again, I am not the CEO of Petco here. If we go ahead and what is this here? We can look at the supply chain. Not too much to look at here. Total capital expenditures increasing from 148 million to 156 million, and then increasing to, it says their estimate is between 165 to 180 million. For the digital information and technology, 65 to 70 million. New and existing pet care center locations, which is the most because they're investing a lot in that, 95 million to 100 million. So now we can go ahead and just look at their current assets here. This is a much more detailed version of it, and it's like on a quarterly basis too, which is awesome here. Or yearly basis, sorry, as well as quarterly. But if we go ahead and look at current assets, we can go down and look at total assets increasing from 4.9 billion to 6 billion as of February 1st, 2020. October 31st, 6.2 billion. That's great. If we go ahead and we can look at total liabilities, it increased to 5.6 billion. But as long as their total assets are outweighing their total liabilities, I am comfortable with that. Total equity, we already kind of touched on that, decreasing to 545 million. I know there's a lot of repeat stuff in these slides, but again, we're just kind of going through the entire S1 form. Got to look through all the details here. We already touched on most of this as well, so there's not too much, but we can go ahead and check out that net loss. So in February 2nd, 2019, it was a net loss of 413 million, decreased as of February 1st, 2020 to 103 million. And now that's decreased as of 39 weeks ended October 31st to 13 million, which is, that's great. So we can go ahead. We already looked at most of this. This is a more detailed version. If you want to go ahead and look at some of their cash flows, if you want to look at a lot of the more specifics, such as their receivables, if you want to go ahead and look at some of the repurchase of equity or whatever it might be within the sheet here, you can do that. But again, it's not entirely necessary when reviewing this company right now. We've looked at a lot of the basics. One thing that is really interesting is their revenue recognition. And what you're going to notice here is dog and cat food is their largest revenue generator here. So that segment, as of 2019, year ended February 2nd, they did $2 billion. And that barely increased as of February 1st, 2020. And I think that really didn't increase at all, despite, people. And if we go ahead and look at, same with 39 weeks ended, it's basically the same. Just a slight increase from about $10 million to $20 million there. So, yeah, that's just not a crazy increase in growth, despite people buying more animals, despite the whole industry growing overall, as we saw previously at the beginning of this video. So why is that not growing? Well, I think that's because they have a lot of competition from online stores such as Chewy. If we go ahead and look at supplies and companion animals, you see that doesn't really increase as well, even slightly decrease. Although 39 weeks ended, we do see a slight decrease as well, which is kind of interesting, actually. Maybe the supplies side of things decreased. That would make more sense since people are buying more companion animals right now, but maybe buying less supplies for them since they have less cash on their hand, or they're in a tougher financial situation to support their furry friends with, brand new castles and whatever it might be that they're buying them, or toys, etc. Now, if you look at services and other, that is the one segment that did see growth from February 2nd, 2019 to February 1st, 2020. That's great, and that is largely due to the veterinarian clinic. So to me, why aren't they heavily investing, or I think they are heavily investing, but they should go all in, or more all in, on their veterinarian clinics and those services. So grooming, training, veterinarian clinics. And I know I've already touched on this, but I'm just to re-emphasize that point, because that is really the growing segment, and in my opinion, the highest margin segment, and just the best profit puppy for Petco. They're going to have a really hard time competing with these online stores like Chewy in the dog and cat food segment, which is why I don't think it's seen any growth. Now, here's a hot take. Petco and Chewy should merge. This is kind of just a random moonshot out in the dark here. You can criticize me for this. You can give me your 2 cents on it in the comments below. I'd love to hear it. I think they should merge, or Chewy should go ahead and acquire Petco. Now, why? Well, I think Petco could use its stores as distribution centers to allow for faster delivery for Chewy. One of Chewy's problems recently has been competing with Amazon, which we all know can do same-day delivery. Now, if I have a dog and I want to go buy dog food, number one, I can go walk down to the retail store, but perhaps right now the retail stores are closed, or you simply don't feel comfortable leaving your home and doing that because of the current situation we're in. Although that is starting to slightly change. We've seen the vaccine coming out, etc. But let's say you're just too busy to go down and pick up dog food, so you want to order it, and you want it there to be the same day. Well, why would they go to Chewy if it's going to take 2 days, if we're just going to Amazon, where they could get it the next day or the same day? So by having Petco stores all across the United States and major cities, they could use them as distribution centers and have their own delivery personnel deliver immediately for a same-day delivery in your local area. On top of that, Chewy could integrate the veterinarian stores that Petco is heavily investing in into its app. and that would get way more exposure. So now Petco's veterinarian clinics would see increased growth and exposure and usage from integrating it into Chewy's app. Plus, they could use increased delivery and have more efficiency using Petco's stores as distribution centers. By shutting down all the unprofitable Petco stores, you could then only use the profitable stores. So now, instead of having a distribution center that you're only benefiting from online sales, you could also generate online sales as well as retail store sales with your distribution center, if that sort of makes sense. Now, they would also control significantly more market share in terms of the retail sector and the overall market share. A lot of the market share in the pet industry is taken up by single mom and pop shops. If they want to make a big business, and I know this isn't the best thing for consumers, but try and, monopolize the pet industry, I think this merger would make a lot of sense. On top of that, it would be better suited for random economic conditions, especially for Petco. If we look at Chewy, again, up 247.6% this year. They're worth $41 billion. They could easily acquire Petco or merge them into them. So anyways, guys, thanks for watching. Please subscribe. I know this was kind of a weirder video. I don't usually analyze these types of companies, but twitter.com/StockerFinance. Tweet at me your hot takes or any information you have on the finance industry. I will be doing the same. Check out these videos, and patreon.com/StockerFinance. I post written analyst reports in my personal portfolio if you'd like to support the channel during these times. Anyways, this is StockerFinance.